72,000 California residents, including people in my county supervisor district, are losing their insurance coverage. Greedy insurance companies like State Farm are using homeowners, renters, and business owners as a pawn in their negotiations with the state on new insurance regulations. They are severing ties with homeowners and renters in San Diego County, which is not very neighborly of State Farm or any other insurance provider. The state is working in good faith to address insurance provider concerns, but instead of being a good neighbor, State Farm is jeopardizing people's lives and belongings to prove a point, and it's reckless. So on Tuesday, I'm bringing a resolution to my colleagues on the Board of Supervisors, asking them to first adopt a resolution opposing State Farm and other large insurance companies' decisions to abandon homeowners, renters, and business owners. 2, encourage insurance companies to work together with the state insurance commissioner in modernizing the insurance marketplace to ensure long-term affordability, availability, and sustainability of coverage. And 3, for the insurance commissioner to ensure transparency and accountability in the rate setting process so that homeowners are getting a fair deal and are protected from paying exorbitant rates. I've heard from realtors, homeowners, builders, and renters across San Diego County about the pain insurance companies dropping coverage is causing everyone. At least 880 residents, 880, in my district alone have had State Farm drop their coverage, with the largest number in Rancho Santa Fe. Other areas of my district with affected residents include Carmel Valley, Encinitas, Mira Mesa, La Jolla, Carlsbad, Solana Beach, and University City. It's not just affecting my district, and it's not only affecting homeowners. James Cousteau is here with us today. He's a homeowner in District 4 in Spring Valley. He was dropped from his policy even after investing heavily in fire mitigation. Spencer Katz is one of my team members, and he's also here with us today. He's a young renter in South Park, and he was not renewed by State Farm after switching rental properties. Bill Kavanaugh, who is here with us today, is a homeowner in District 5's Vista community. He's also a home builder, and the people he is building homes for are having an incredibly hard time getting insurance, which is impacting the housing market. And we must not forget how this is affecting older residents, many of whom were State Farm policyholders for years and years. People on fixed incomes cannot afford massive rate hikes. We have Robert Prath with AARP California here with us today to discuss the impact on older Californians. Our ability to locally affect change on this issue is limited. The state's insurance system is broken, and there is difficult work ahead. My team has met with State Insurance Commissioner Ricardo Lara's team and shared the critical urgency facing my constituents. Commissioner Lara released draft regulations on March 14th, 2024, and aims to complete an overhaul by December 2024. Governor Newsom added further urgency on May 10th, pushing to stabilize the insurance market with expedited rate approvals that could take effect by July 1st. But I want San Diegans to know that we are standing up to corporate bullies, and we will be doing everything in our power to support the state with its regulations. One group on the front lines is United Policyholders. They are a nonprofit with offices in all 50 states who are a voice for consumers with all types of insurance. They are advocating for the people who are being treated poorly by State Farm and other insurers in San Diego County and across the state of California. So we're lucky in San Diego to have their Deputy Executive Director, Valerie Brown, with us here today. She's here to talk about what they are seeing on the ground and share some tips for homeowners and renters. Please welcome Valerie Brown.
Thank you. As a community member of Rancho Bernardo, who experienced the 2007 fires and has been helping with that ever since, I just want to say this region, our community is getting hit extra hard by the current insurance crisis. Home insurance is not a luxury, it's a necessity. And it's imperative that we protect homeowners from being arbitrarily dropped or overcharged simply because of the zip code they live in. San Diegans have been working hard since the 2003 Cedar fire and all of the other fires we've had since then to create defensible space at a very rapid clip. We have been one of the leaders in this area for nearly 20 years. And United Policyholders, our nonprofit is helping people navigate this crisis and keep their homes insured as best we can. I want to commend our county supervisors for taking up this issue and dealing with this. It's really hard for people to figure this out. It's a lot. Most of us touch insurance, and we touch it when we buy a home. And so for the most part, it's just something we have that protects us. And we pay that premium in good faith, thinking that, we have done our part of the business transaction, and we're expecting them to provide us that service and claims handling after a disaster, after a claim. And for folks who have been insured for 40, 50 years, it feels like a covenant has been broken. And so just two tips for people who have been dropped or getting that notice. Just be aware it's going to take time. That's actually why the Insurance Commission has extended the period of time to 75 days for them to give you notice, because it's going to take a long time to find your new insurance policy. It's just a matter of the reality of what's going on. And you're going to have to look at multiple insurance companies. So finding an independent insurance broker that can help you, that has dozens of companies in their portfolio, is going to be key to finding a policy. And then, of course, looking at affordability, just to be really blunt, my house, I have a $10,000 deductible on it. I have already made that decision that I am not going to be able to file a water leak claim. I have coverage, and it feels really weird paying so much for homeowners insurance, knowing that I only have it if there's a major disaster. That's the attitude I've had to take with this, to be able to find something that I can afford. And I have the luxury of being a working professional who has a spouse working, and so we can absorb that. But our seniors don't have that capacity. So thank you for your time.
Thank you. Thank you very much, Valerie. So now I'd like to introduce AARP California's Robert Prath. As I mentioned earlier, seniors are greatly affected by dropped insurance coverage. Sometimes the rate hikes they have to deal with are upwards of 400% higher than they had been paying. So with us to talk about how older adults are being affected, please welcome Robert Prath with AARP. Thanks.
Okay, good morning, and thank you, Supervisor. As the nation's largest nonprofit, nonpartisan organization advocating on behalf of older adults, AARP California has heard from hundreds and hundreds of our members traumatized by threat of losing their home insurance coverage. Older adults tend to make up a greater percent of rural populations. They live in older homes, and they're more likely to be impacted by the current rash of insurance policy cancellations. For older adults on fixed income, finding a new coverage can be confusing. It's financially crippling, or even impossible. It jeopardizes their ability to stay in their home, preserve their life savings, and threatens loss of something they've worked their life to preserve. We urge support for initiatives like this, opposing policy cancellations, and advocating for collaborative efforts to protect homeowners, renters, and businesses to work towards a stable home insurance market that's fair, is transparent, and provides the peace of mind that people thought they had purchased when they bought their insurance policies. So thank you very much for what you're doing. Thank you very much for this initiative, Supervisor.
Thank you. Thank you so much. So I want to reiterate that 72,000 California residents, including over 800 people in my county supervisorial district, are losing their insurance coverage. So on Tuesday, I'm asking my colleagues to adopt a resolution opposing what State Farm and other insurance providers are doing. Severing ties with homeowners and renters in San Diego County is not very neighborly of State Farm or any other insurance provider. Robert, Spencer, James, all three of them here today, have all experienced the wrath of insurers dropping coverage, and they are available for interviews if you would like to speak with them after this. Thank you. So if anyone has any questions, I'm happy to stay.
Supervisor, when it comes to the opposition of people losing their policy, is there any teeth? Is there anything, any actionable something that can happen with this, or is it just, hey, we don't like you guys leaving?
So the real core of this is going to come down to the state's negotiations and state regulations. So what we're trying to do is lend the state support so that the state knows that our entire region is behind the insurance commissioner as it attempts to negotiate with these insurance providers.
And does it feel like it's an actual negotiation, or does it feel like this is a systemic change? Because we've got dozens and dozens of insurance companies pulling out. It seems either a perfect negotiation tactic, or the value play is just gone and they're out.
Well, we think it's a negotiation tactic, right? I mean, this is a huge market. Don't forget, California is the 5th largest economy in the world. So there are a lot of homes to insure here, and there's a good business to be had in the state of California, but they're up against the state who's trying to make sure they play by the rules and play fair. And I think they're trying to play hardball with people's lives and futures in those negotiations. And I'm here to say that's not okay. Enough is enough.
Is there, could I don't know, could the county do something like, if State Farm pulls out their homeowners insurance policies, could they also just bar them from all the other policies as well? Could they just say it's all or nothing? Is that something the county could do?
The county could not do that, but the state could. And that's a big piece of what we're trying to tell the insurance commissioner is, we have your back. To do it, to do it needs to be done to make sure that we have fair rates for homeowners and renters and business owners across our county.
If you could give us a little perspective, what's changed so drastically in either the insurance decision making or the physical environmental decisions that the insurers are making? What are they looking at? What are we looking at?
It's a great question. Part of the big challenge is it's a black box. So as I'm sure some of our folks here can tell you, the models that they use are proprietary. So we don't quite know why what's driving these decisions and whether they actually have modeling that's showing that there is a change or whether they just see an opportunity to drive a hard bargain with the state. We don't know. And that's one of the big problems, that there's a complete lack of transparency around rate setting or around risk modeling. We don't have any way of knowing, whether they're taking into account all the fire mitigation work, for example, that we at the county have mandated. We don't know. So we might have individuals and who've invested significantly to make their homes very safe. And we don't know if that's being taken into account at all. So there's a lot of I'd say a lot of dodginess in these negotiations, and that's a big piece of what we think needs to change.
Just a quick one. Is it safe to say that fire risk is driving a lot of this?
No, I think we don't know. I think that's the kind of the core of this. We don't know. We know that there's fire risk, there's flood risk. That's been true for decades, right? We've had fire risk in California for decades. We've had flood risk, so we don't know. It could be climate change, right? It's possible. It's climate change modeling. It's possible that it's none of the above, and they are just trying to avoid basically providing fair insurance to everyone and using this as an excuse to hike rates. And we don't have visibility into their models. And so a big piece of what is very possible is that they're just kind of using homeowners as pawns in their negotiation tactics with the state. So I think the major, as a researcher by training, a person who likes to look at data, I would say one of the biggest issues is there's absolutely no transparency and absolutely no accountability in rate setting.
With that,
Okay.
Thank you all. And then others are available if you want to speak one-on-one with them.
Thank you.